There'll come a time when the dollar loses its status as a reserve currency. You don't even want U.S. Treasuries because you don't trust the U.S. Treasury, either because they're seizing assets or they're going to go to hyperinflation. The seizing asset part is happening now. That happened at the G7 summit in Napoli, Italy on June 13th, when they agreed to basically steal the interest on the frozen Russian assets and use it to pay principal and interest on a $50 billion bond issue guaranteed by the United States of America, and they're going to give the money to Ukraine. Like, time out.
Did you know the US government is confiscating assets on a massive scale? At the recent G7 summit, they agreed to seize $75 billion in interest from frozen Russian assets to fund a $50 billion loan to Ukraine. Financial expert Jim Rickards warns this overuse of sanctions and asset seizures is driving countries to the BRICS alliance, which aims to create a new global currency. Imagine the dollar losing its status as the world's reserve currency. This could be the beginning of a financial revolution. BRICS, which includes powerhouses like Russia, China, and India, is expanding its membership and creating a new trading currency to bypass the dollar. This move could shake the global financial system as countries look for alternatives to avoid US sanctions. Rickards cautions that the US Treasury and the Federal Reserve are taking the dollar's dominance for granted, potentially leading to its downfall.
It is a war. We're in a war. We're in a financial war right now. I know there's a kinetic war in Ukraine, kinetic war in Gaza, confrontations bordering on, violence in the South China Sea. The Houthis have effectively closed the Suez Canal. So we have enough shooting wars going on, thanks to Biden and our failed foreign policy. But this is a financial war. Now, and I've talked to the Treasury and the Pentagon and the Fed and the intelligence community about 10, 15 years ago, we had these discussions, although not that anyone took it seriously when they should have. But a lot of what you're hearing has come out of the St. Petersburg International Economic Forum that was held in St. Petersburg at the beginning of June. And Putin was there. Sergei Lavrov was there a couple of years ago. Like, nobody showed up because Russia bad kind of thing. But now people realize that America is really the one prolonging the war in Ukraine, and Russia is doing what they have to do to kind of protect their national security. They don't want to be backed into a corner. But now it's like okay to go there, and there were delegates and delegations, attendees, experts, etc., from over 100 countries who were there. And that's where a lot of the update on the BRICS currency was coming from. Now, the next BRICS summit, we talked last summer, I was giving presentations on the BRICS summit meeting in South Africa last August. But there's a rotating presidency. Mm-hmm. You host the BRICS summit on a rotating basis. Yep. This year, it's Russia. And they're having this summit in October in Kazan in the Russian Federation. And what they're going to do is admit a lot more new members. We have the list of applicants. I don't know exactly which countries are going to join, but Turkey would be high on the list, and some Malaysia, and some other, maybe Saudi Arabia and some other important countries. But the point is, this is the key to making the BRICS currency, whatever they call it, the unit or whatever, a very successful trading currency, and basically for trading, settling, balance of payments, etc., is to expand the membership in the group. So if you have two countries, Russia, let's just take Russia and India, for example, and Russia sells oil to India, which they're doing, and India pays in rupees, Indian rupees. Okay, that works. You don't need to go through SWIFT for that. You can use Russian bank accounts in Mumbai. But what's Russia going to do with the rupees? Well, they can buy a certain amount of chicken curry or whatever. But there's a limit on what you can do with the currency. So, in a bilateral relationship where you agree to accept each other's currencies, that can work. It's not that difficult to do. But the problem is, what do you do with the currencies? Who really wants Russian rubles? Honestly, who wants Chinese yuan? Who wants Indian rupees? Now. But if you expand the membership, it's no longer 2 countries or 4 countries, but it's 20 countries. And all of a sudden you're Russia and you sell oil to India, but India pays you in the BRICS currency, not Indian rupees, but in the new BRICS currency. But Russia can take the BRICS currency and spend it in China, or buy aircraft from Brazil, buy manufactured goods from China, buy oil from Saudi Arabia. Or, well, they don't need the oil, but other manufactured goods from Turkey, as the case may be. Well, once you expand the membership, now the currency is really useful. So it's not just limited to whatever one country can sell you. It's expanded to what 20 countries can sell you. Guess which monetary union has 20 members?
Right.
The euro. So people who say this can't be done, I'm like, hey,
Exactly.
ever heard of the euro? It can be done very successfully. So the key is not, cooking up some formula, a gold standard exchange. Those are important issues. I'm not dismissing them, but I'm saying the real key is expanding the membership. By the way, the BRICS started, I know it was a marketing gimmick by Goldman Sachs in 2000, but as far as a serious political organization, it really started in 2006. And so they've been around for 18 years. And they have the New Development Bank in Shanghai. And by the way, who's the president of the New Development Bank? Dilma Rousseff, who's the former president of Brazil. This thing is very well thought out. They have the contingent reserve arrangement, which is basically their own version of the IMF. So they've duplicated or replicated the Bretton Woods institutions on their own terms, and they're soon going to have their own currency. And it looks like it will have a gold reference. I'm not saying it's a full-blown gold standard, but the value of the unit of currency will be based, I've seen some versions 40% based on weight of gold, not the dollar price of gold on a given day or on a particular day, but weight of gold, which is a different way of thinking about it. So that's coming. And now that doesn't make it a reserve currency. Reserve currency is different than a trading currency, but just the trading currency alone can be very, very successful. And it's not the end of the dollar. It doesn't mean, oh, here's the BRICS currency, that's the end of the dollar. That's not how it works. It's like someone new sits down at the table. It doesn't mean the dollar goes away. It doesn't mean that, but it means that all of a sudden it's competing for its share of world trade and world payments with a new currency that has the backing of, maybe upwards of 20 countries, including countries that collectively are, over 50% of global GDP, using purchasing power parity measures. Half the population, more than half the population of the world, more than half the landmass, et cetera. This is not some ragtag group of so-called third world countries. This is more than half the world. Again, I've warned the Treasury, I've warned the Pentagon, I've been, all over Washington on this. And I say, look, here's your problem. You're taking confidence for granted. You're assuming that people always have confidence in the dollar. Therefore, it's a hammer. You can go bang any nail you see. You can use it as a weapon. You can sanction Russia. You can seize the assets of the Russian central bank. You can kick countries out of SWIFT. You can impose secondary sanctions. Secondary sanction is where, you're not the bad guy, but you're trading with the bad guy. So now you're a bad guy too, and I'm going to punish your banks and your payment system and limit the ability of third parties to deal with the second parties who are dealing with the guy I don't like, which is Russia in this case. That I told the Treasury, I said, you're overusing the sanctions. They do work in limited conditions. They don't work in all conditions, and they definitely do not work when you overuse them, because my question to them is, how many times can you hit the punching bag before the punching bag walks out of the room? And that's what the BRICS is all about. The BRICS are like, no mas. Like, we're going to do our own thing. Now, you can't do it overnight. It's taken years already, and it's going to take some years more, but it's well along the way. But I've said the greatest enemy of the dollar is not Russia or China. It's the United States Treasury and the Fed. They take it for granted. They overuse the sanctions. They try to use it as a bludgeon. And all that does, it forces people to walk away from the table. It's like, hey, I've had enough, enough sanctions, enough insults. Get me a new currency. So that is the process by which the BRICS currency will gradually, not overnight, but gradually displace the U.S. dollar as a trading currency, but not all at once. But you're asking a deeper question, which is, does there come a time when the dollar loses its status as a reserve currency? You don't even want U.S. treasuries because you don't trust the U.S. Treasury, either because they're seizing assets or they're going to go to hyperinflation. The seizing asset part is happening now. That happened at the G7 summit in Napoli, Italy on June 13th, when they agreed to basically steal the interest on the frozen Russian assets and use it to pay principal and interest on a $50 billion bond issue guaranteed by the United States of America, and they're going to give the money to Ukraine. Like, time out. So, by the way, who's the lender in that situation? I just said the United States of America, but it's me and a lot of our listeners. We're the ones who pay the taxes to make that all possible. So we're lending the money to Ukraine, which most Americans don't want, by the way. But if you have a $50 billion bond at 5% interest, that's a pretty good estimate of what an interest rate would be if it's backed by the U.S. That's $2.5 million a year in interest. Let's say a 5-year loan. So what's that? 10 is $12.5 billion of interest on $50 billion of principal. So in 5 years, you need $63 billion to pay back the principal and interest on the loan. Where are you going to get $63 billion? Well, the answer is the frozen Russian assets are $300 billion at 5% interest, because assuming they've been rolled over at that level into new treasury notes, that produces $15 billion a year in interest. Again, over the same 5 years, that's $75 billion. So we are stealing $75 billion of Russian interest to pay maybe $62.5 billion on the $50 billion loan. It's still theft. I mean, I don't care what you call it. There's somehow they got this legal opinion that, we're not stealing the bonds, we're just taking the interest. I'm sorry. If I own a bond and it pays interest, I own the interest. So to say that, you're just stealing the interest, you'd have to be as dumb as Janet Yellen to think that works. And so that's what they're doing. But the rest of the world is watching. Saudi Arabia, Taiwan, Japan, Korea. Everybody's watching. They say, wait a second. If you're stealing U.S. Treasury securities in the form of interest from Russia because you don't like Russia, what if you don't like me someday? What if you decide that I'm not doing something you want? And that's the motivation for getting out of the dollar. So you know the famous Hemingway quote from The Sun Also Rises, where the two buddies are in Spain talking and they're drinking, and one guy said, "How did you go bankrupt?" And the answer was, slowly at first and then suddenly.